If opportunities comes in various sizes, will you be ready to catch it? This is what HDFC Mutual Fund is saying. Yes, they are going to launch a new mutual fund called HDFC Multicap Fund, and it is all about opportunities coming in different sizes. And I'm going to say in detail about this HDFC Multicap Fund today. Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Mutual Fund Plan, Money Leaks, and One Page Stock Market Plan. So, author of three books, and you can check the link in the description if you want to check out my book in Amazon. You can read it for free. And let's jump into today's topic on HDFC Multicap Fund. So this is a topic. Just look at one is the biggest diamond, another is somewhat middle and somewhat small. So this is something called large, mid, and small cap. Let's consider that, and you're picking the diamonds inside each and every category, large, mid, and small, and that is the reason they are saying you opportunities comes in various sizes, and are you ready to grab it? And when is the opportunity coming up? Because this is an opportunity from HDFC. This opportunity is coming on November 23rd to December, and the exact date is December 7th. So almost 14 days, 14, 15 days it's there, and you will be able to subscribe to this NFO. It's a new fund offer, and the existing fund, they made it as HDFC Flexicap. It's a categorization. Okay, so now HDFC is catching up with a new fund because many of the companies, mutual fund companies, are launching several new funds, and HDFC didn't have this category, and that is the reason they are launching HDFC Multicap Fund. So this is one of the primary reason for HDFC, according to me. But what is that? What is multi-cap? Just let's look at that. Look at that. Okay, so 25% will be in large caps. Top 100 companies by market cap. Just look at that. Well-established business, market leaders, stable and less volatile companies. Key sectors includes banking, IT, and auto. This is something like different what I've seen in other multi-cap presentations, because they are able to differentiate why they are launching and what are the sectors they are going to choose. Maybe our next level of differentiating factor, I will say. And the 25% in mid cap, just look at the industries, industrials, which means chemical industries, NBFC, auto ancillary companies. The 101 to 250 companies will come by market cap, will come under mid cap, and basically they are mid-sized companies, and they are future large cap. From here, from top 101 to 250, they will move into top 100, and they may be in the top 30 as well. That is a possibility, and the volatility is large compared to the large cap fund because they are the mid-size companies. And another option is minimum 25% of the total assets in small cap. Just look at 251. From 250 on onwards, it is considered as a small cap and very niche business. Anything, any small category, it can be anything. Okay, high potential for growth, because when the economic tide favors it, automatically the stock will go, the business will start flourishing. Just look at the key sectors: chemicals, hotels. In chemicals, there are so many sectors, subsectors, agrochemicals and everything, hotels, media and entertainment. Picking the right company needs a lots of analysis and research. This they are going to do. And what will be the remaining 25% of the portfolio? The 25% consists of market segments or debt or 20 money market. They can be in any of the large, mid or small, or money market or debt or whatever as per the fund manager's wish. Or up to 10% in this 25% they can put it in real estate investment trust or investment infrastructure trust. It can be a mutual fund, or they can invest in an ETF or whatever. The choice is up to them, but it should be it can be related to real estate investment. And up to 20% of the total assets in units of mutual fund, and yes, that can be in the same mutual fund also. So this is an option which is considered for multi-cap fund, and this is the reason they are called as multi-cap. And why it reduces the risk factor? Because in my earlier video there was a conversation on YouTube saying that flexicap is better, multicap is better, and here we have a data why multicap is a lot better compared to flexicap. Just look at that. Large cap means more than 80% in large cap. Flexibility is available in flexicap, and other sectors are, as you know. Okay, so it's available in this. And the risk probability, it is in the middle. The multi-cap model, just look at, because they won't go beyond 25% in large cap, so that the returns are stable. 25% in mid cap, somewhat less volatile, and the returns are much bigger than large cap. Small cap, niche segment, when economic tide favors, automatically the returns will be much bigger, so it will increase the returns possibility. So the risk is reduced in multi-cap compared to flexi-cap. That is one of the advantages of investing in a multi-cap fund. So if you're not considered investing in multi-cap, this is a time you can look at considering investing in this multi-cap fund. Okay, so these are the advantages of going with multi-cap fund. Okay, and finally the list of companies where they may invest, because just look at the large cap, the consumer finance companies, something like Bajaj Finance, and large financier of consumer durables, exactly, that is Bajaj Finance. Construction engineering, if you look at L&T kind of companies and other construction companies which got launched in the last couple of years, IPO I mean. And food retail outlets, leading supermarket chain, it can be anything. Okay, and personal products, multinational FMCG leader in oral care. Obviously, it says about Colgate and HUL, Pepsodent. So all these companies will come in. Metals and mining, leading mining company Vedanta, or even the Hindustan Zinc. And tires and rubber, largest tire manufacturer. It can be Seat, Apollo, or anything. Okay, and auto parts, footwear, textile apparel. All, just look at the first almost five companies are large cap, sectors are large cap, and the remaining tires and rubber, auto parts, and footwear are falling under mid cap. Textiles, healthcare services, and application software is falling under small cap. So it is clear that the entire market cap is based on the sector rotation sectors, and based on the last couple of years, last few decades of growth, certain sectors are falling under large cap, certain sectors are falling under mid and small. So that is how the market is allowing the sectors to perform, we can say. And now the need is going towards the automobiles and everything, so there is a possibility the mid cap can become a large cap going forward. And finally, the expense ratio, because people will come to expense ratio. I know you will you will be asking about it. As usual, it's a, if it's a direct, it can be between 1 to 1.5%. If it's regular, it can be maximum 2.25 to 2.5% over a period of time, and then it comes down. And if the size is going up, the expense ratio will come down. Same applies for direct fund. And should you go for this fund or should you go for index fund? My idea is that, my view is that, as it's a multi cap, you will be getting better returns compared to index funds. So this should be in your portfolio, and for sure you will see bigger returns when it comes to multi cap fund. So if you're not invested in any of the multi cap till now, please go on invest in HDFC multi cap fund. I'm a registered registered mutual fund distributor. I am not a financial advisor. If you want to know much for further details, you can reach out to me or approach a financial advisor before investing in this fund. So thank you so much for watching. Please share this video with your friends who wants to know about NFO, who wants to invest in a multi-cap fund, and see you tomorrow with yet another new fund offer, because there are lots of funds which is lining up. And thank you so much for watching.